Rich for Rich Makes You Rich. Want to discuss today what happens when you lose a major amount of money in arbitration and your stock price rises. What does this mean about your stock and the market? Starbucks lost $2.7 billion to Kraft/Mondelez in arbitration over the packaged coffee business that Starbucks took back from Mondelez in 2010. Originally, Starbucks offered zero, then Starbucks offered $750 million to settle. What does it mean? Starbucks obviously thought that they would likely lose more in court. However, no one expected the arbitrator to award Mondelez $2.76 billion. Mondelez stock price went up on the news. Why? Because Mondelez is using it to purchase back stock, which will raise earnings per share, which is a form of a dividend, a non-taxable dividend, to investors. Starbucks, on the other hand, which lost much more money than expected, actually share prices rose the same day by 1%. So, imagine going to purchase a house. There's $1 million in cash in the attic. You say, okay, I think that this is a fair price. You're about to make the deal. The next day, the realtor comes and says, we want more for the house, but the $1 million in cash that you're expecting to have extra in the attic is gone. That represents cash on the balance sheet. What does this say? This says that the market right now is very frothy, that people are just bidding up assets, and the fact that people don't value the balance sheet. The price of a stock is almost entirely seemingly based on earnings per share and the subsequent expected rise in the generating cash income. But when you have a real asset and you lose it, you lose your house, you lose your bank account, all the cash in there. Doesn't that lower your net worth? Why would people be paying more for the stock the very next day? Have the circumstances in the market surrounding your product changed so much that it accounts for over a year and a half of free cash flow disappearing overnight from your bank account? Absolutely not. Something here is amiss. Investors need to start to learn to value what a company is actually worth and not just some conjectured, hypothetical future income stream flow. All right, hope that made sense. Rich for Rich Makes You Rich. Signing off. Till next time, stay thirsty, my friends.